What's up everybody? Simon here. In this video, we're going to talk about mortgage rate forecasts in 2024. I've had some crazy guests I shouldn't say they're crazy, but I had some great guests on my podcast that are in real estate. And in this video, we need to discuss the mortgage rates that are going to potentially happen in 2024. So overall, the rates are around 7%. It's kind of slowed down the real estate market, but it hasn't killed it. Once the rates go down, the real estate market is going to explode. So let's get into this video and let's talk about what the rate will probably be in 2024. Okay guys, so the interest rates, they have hurt a lot of people. They've hurt luxury real estate in particular, with sellers not wanting to sell their properties, thinking they're not going to get the best value because they're going to get less buyers who can't afford a 7 to 8% interest rate. And that is factually true. In addition, people that would sell their home are not trying to move out from their 3% interest rate to buy another home at 7%, which would double their mortgage. So it almost devalues that move and transition to up the quality of your property. Now, I've made videos in the past of how to get around high interest rates in terms of maybe getting different types of loans, such as a interest only and riding the wave, and there are ARM loans and so forth. However, the interest rate affects everything from commercial property to residential property to money that you're lending. It's really a headache. And the government had to put out high interest rates to curb all that money they printed and the inflation. It caused the stagflation, which basically has high interest rates, high food prices, yet the cost of living has gone up, yet the salaries have not matched. So interest rates are gonna be coming down as predicted by Fannie Mae and some of these other companies that handle some analytics for interest rates. And that should be good news for you if you're looking to buy a property or if you're looking to potentially sell a property. Historically, we are at some of the lowest inventory, which is really weird considering the fact that inventory has potentially should have been higher on the market with all these foreclosures that were supposed to come past the pandemic period. But now properties are not on the market and interest rates are high and sellers aren't selling. So we are stuck with kind of a stagnant market. The National Association of Realtors has an outlook that interest rates are going to be at 6% in 2024, mid-2024 in fact, which is a very rosy estimate. 6% is historically around where interest rates have been. We've seen some crazy rates in the 3% column in the past few years, and I've been one to take advantage of those rates. However, are we ever going to see 3% rates? Other companies are predicting that we'll see 3% rates again in 2025 to 2026, so end of 2025 and the beginning of 2026. That is a very extreme outlook. I don't know if that's going to happen. If it does, I think that's a great time to refinance. Anytime you hit threes, you should refinance and refinance potentially again, in my opinion. However, check with your people that advise you. Overall, if we get down to 6% interest rate in 2024, according to the National Realtors Association, you are going to see some more sales. You are going to see some more potential buyers coming into the market.
Are you sure about that?
Fannie Mae, however, forecasts a 6.7% interest rate to 7.1% interest rate in 2024. So they're not thinking interest rates are going to go down that much. With rising home prices and rising interest rates, you're really kind of stuck not being able to purchase the property that you want. And that is extremely frustrating. And then if you are in a property, you're stuck in that property, not being able to sell your property and getting out of your crazy low interest rate to get into a high interest rate on the next property unless you're paying all cash. All cash offers are also down, considering that a lot of international investments are limited recently with everything that's going on around the world. The housing inventory is predicted to remain low in 2024. I would actually argue that and say that I do think that there's going to be more supply of housing in 2024 because it takes quite a while for all the foreclosure documents to process on people that cannot afford their homes. So during that pandemic, we had a 1-year forbearance. After that, the foreclosure proceedings started. That ended in about 2023, but then it takes about a year for all of it to settle and all of it to come out. So I still think that we're stuck in that one effect that's going to lead to potentially another effect, or the domino effect, we should say, where we will see more foreclosures, more properties on the market as the interest rate drops, as well as more sellers willing to sell and relocate to a cheaper area of living where they could purchase a home potentially in cash. So for example, if you live in California and you have $1 million property that's completely paid off and you've owned this home for many years, you may be getting up and moving to Texas or Colorado or Nevada and buying a $300,000 property in cash where you're comfortably living and you're retiring. You're not looking to purchase a $2 million property somewhere else because the interest rates are just quite high and you don't want to potentially assume a loan. So there are potential sellers out there that have been sitting on properties worried about the sales of their property, the high interest rates, and not as many buyers coming in. Also, we got to consider the global shifts and the state or regional shifts in taxes. A lot of people, depending on where you live, are trying to flee states that are charging taxes because there's no point to it, right? Why would you pay 13% in California at the highest tax bracket when you could move to a nearby state and not pay any state income tax? You could even move to the border of Nevada and not pay any state income tax, or move to Florida, Texas, among other states where the income tax is not affecting you. It's tough enough that you're being billed by the federal government a pretty high tax, and tax has been at the highest it's ever been in history. Then you're getting billed by the state as well, and you're not getting the infrastructure for what you're paying. You're not getting any additional value. Is it safer in California than Florida while you're driving down the highway? Are the potholes better, etc.? What are you paying for? You can't pay for weather, right? So what's the point of paying a state income tax if you could avoid it? And personally, I am one person that's considering that as well for my future plans. So as the interest rates go down, this is what you're going to expect. Home prices are going to shoot through the roof. They are remaining high and they're remaining steady, and it's because of low inventory. As soon as the interest rates go down, more sellers are going to put properties on the market, but also more buyers are going to come in qualified and willing to buy a property because they've been holding out during this time. So the real estate boom is still yet to come from all this money that was printed and put into the market. It's going to come out, and with lower rates, with lower down payments that are required nowadays. In fact, Fannie Mae released a 5% down on multifamily properties, which is pretty cool. I may make a video on that. But with more opportunity for buyers to come in and buy a property, you're going to see higher housing prices. So be on the lookout for that.
Nice.
Check out, I've done a very good podcast recently with Tracy McLaughlin. She's America's top real estate agent, one of the top ranking ones. She and I go into loans and rates and everything that's happening with the cycle. Now that's on the Ideal Hour podcast. I'll link it below. But check that podcast out if you're interested in purchasing a property. She has written books on real estate. She's transacted over $4 billion in real estate, and will give you some great advice as to what may be coming on the market. Interest rates are going to get lower. Are they going to get lower than 6% in 2024? I don't think so. Comment below what you think. Let me know if you like this video. Like it, subscribe. Check out the Ideal Hour podcast, including that one episode. And I look forward to seeing you here in the next video. Bye.